Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy because problems are continuing to persist for Russia. And this isn't just related to the sanctions. They're now having problems relating to the value of the ruble. And that might surprise you because you might be thinking, hasn't the ruble been strengthening over the past few months? And it has. But that's actually causing Russia major issues. And the figures for March have now been released, and they show that oil and gas revenues were down by 17% in the month. And year to date, Russia has posted a budget deficit of 2.2 trillion rubles. So we'll hear from President Putin as to why that's happened. It's due to a combination of falling revenue and increasing expenditure. But it doesn't just stop there for Russia because inflation is now running at more than 10%. It's the highest level since February 2022, so for more than 2 years. And food inflation is actually hit its highest level since September 2022. So this is getting a serious problem from Russia's point of view because it's needing to bring that inflation target back down to the level of 4%. But it hasn't been there very often at all over the past 3 or 4 years. And what you have is a cumulative build-up in the economy. When you've got constantly rising prices, it causes problems for everybody, not just consumers, but also companies. And we'll see the producer price index is also causing issue for Russian businesses. They're now losing profitability. So there are a whole host of different issues now converging on the Russian economy. And one of the biggest problems that it's facing going forward is the fact that as a result of Donald Trump's tariffs and the uncertainty and the global expectations of a slowdown in 2025, oil prices are now in decline, and that is a major problem for Russia because their main source of revenue remains oil. Before we go on any further today, I want to talk to you about investing.com, who I've partnered with for today's video, and is the go-to financial site that many of us use on a daily basis. And if you subscribe to investing.com, it gives you access to Investing Pro, which is a powerful AI-driven tool that gives you lots of financial data and information at the click of a button. If you're looking for ideas, Investing Pro gives you the portfolios of legendary investors such as Warren Buffett at the click of a button. You can see all of the different stocks that he's invested into if you want to copy that strategy. But one of the features that I really like is Pro Picks, which gives you AI-driven strategies that have consistently outperformed the S&P 500. And the great news is that I've managed to secure a discount at the lowest possible price. So click the link in the description below for 15% off Investing Pro and start using Investing Pro today. Russia's budget revenues from oil and gas fell 17% year on year in March to 1.08 trillion rubles, which is just over $12.8 billion. And in terms of what that means for the Russian government, their revenue from oil and gas fell to $2.7 billion in the month, which was around 1/3 of what they earned in March 24. So this represents a serious fall in revenue for the Russian state. And Sophia Donets, chief executive at T Investment, said, "The situation is sensitive. This is a noticeable loss that will have to be covered either by additional borrowing or by drawing from the National Wealth Fund, which has already been largely depleted." Now, as we've discussed in previous videos, one of the reasons why Russia's revenue is falling at the moment is because of the fall in oil prices. This chart plots the quarterly movement in the price of Brent crude oil, which is shown by the orange line, and Urals oil, which is the main form of Russian oil, dating back to the start of 2021. And you can see that there is a very close correlation between the two prices. However, Urals oil trades at a discount, and that discount has widened since the start of the war in Ukraine because the West is no longer buying Russian oil and other countries that are buying it want it at a discount. And you can see that over the course of the last 12 to 18 months, we have seen a significant decline in Brent crude oil prices, and that's driven down the price of Urals oil to around $50 per barrel. And that's a major problem for Russia because they've budgeted for this whole financial year at $70 per barrel. And if oil prices do remain at around $50 per barrel, this is what the impact would be on the Russian budget for 2025. On the left-hand side here, you can see the percentage of the budget being taken from oil and gas revenues. And in 2022, it was up at 45%, predominantly because Russia experienced a spike in prices as global shortages struck all around the world as the uncertainty of the war in Ukraine sort of spread through the financial markets. However, as you can see, in 2025, if prices remain at the current levels, Russia would only get around 25% of its whole budget from oil and gas, and that would leave a major black hole in Russia's finances. And in terms of looking at the Russian Federation budget, it's posted a loss of 2.2 trillion rubles for the first quarter of 2025, which accounts to around $26.7 billion, due to a 25% increase in spending compared to the same period in 2024. Commenting on this, Russian President Vladimir Putin said, in total for January to March of this year, the budget deficit amounted to 2.2 trillion rubles. Of course, we must keep in mind that our expenses have increased by 25% compared to the same period last year. This was done deliberately so that participants in economic activities, all our departments, take the necessary actions on time so that our work proceeds smoothly until the end of the year. He went on to note that the increase in the budget deficit was first of all due to the expenditure schedule. We shifted expenses to earlier dates to the beginning of the year so that the federal and regional authorities can more quickly launch national project activities, pay for contracts, start construction and allocate funding. And of course, the war in Ukraine is continuing to go on, and so that's drawing down on Russian resources as well. And he went on to add that nevertheless, we must take this factor into account in any case. Our economic policy must take this approach into account. Now, not entirely sure what that means, but I think he's saying we need to stop spending as much as we're spending, because otherwise we're going to run up a huge deficit for 2025, because Russia currently has a situation whereby its revenue is falling, but its expenditure is rising. And one of the problems that it's facing is what's going on with the Russian ruble. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 12 months. And as you can see, since the start of 2025, the ruble has appreciated in value significantly. At the start of the year, $1 was trading for almost 115 Russian rubles. Today, it's trading for 82. So that represents a huge improvement from the ruble's perspective. However, unfortunately for Russia, this is now causing problems, because when your currency starts to strengthen in value, what it means is that your exports become more expensive, but it's better for your imports. So what we should be seeing is a reduction in inflation, because it's making it more affordable to import things, but potentially Russia would see some losses coming from its exports. However, as Evgeny Kogan, an investment banker and professor at the Higher School of Economics, was recently quoted, he said, "A strong ruble is a joy for Russian consumers, but a pain for the budget. We receive oil and gas revenues in foreign currency, so not in rubles, and then it's converted into rubles. So the stronger the ruble, the fewer rubles that exporters get in the end. So actually having a strong ruble is meaning less profit for Russian companies per barrel of oil sold." He went on to say that to close the growing budget gap, which in January and February was already 3 times the annual target, the Russian government may have to devalue the ruble. The currency is currently overvalued by 20%, and it's expected that by the end of this year it could be back down to between 100 and 105 to try to bring the Russian budget back into check. So although the strength of the ruble usually would mean the strength of the Russian economy, because there is a link usually between what's happening with your currency and what's happening in your economy, in Russia we've got a complete disconnect at the moment, because not many of Russia's trading partners are actually dealing in rubles. Not many of them want to either be paid or pay in rubles, so everything is happening in other currencies. And the value of the ruble is really because the Russian central bank has been manipulating that price. It's been moving it to where it wants to be. However, what it looks like now is that the strength of the ruble is actually backfiring on lots of Russian businesses and also the Russian budget. This chart shows the movement in the official rate of inflation in Russia over the past 12 months. And what we can see here is a very clear trend. It's an upward direction. 12 months ago, in March 24, inflation was sitting at 7.7%. However, the latest data for March 25 shows that it's up to 10.3%. And if we expand the scale of this chart to show the last 3 years, 10.3% is actually the highest level since February 2023. And if you think about the target rate of inflation in Russia being 4%, it's actually only been down at that level for 4 months in the past 3 years. And that was a remarkable drop from February 23 when it was 11%, and then the following month it went down to 3.5%. But as you can see, since that time, inflation has been on the rise. And this is proving a major problem for Russia, because when you got consistent higher inflation than your target, that starts to build up in the economy. People need to be paid more, you need to have higher wages, costs of everything start to go up, and that's very difficult to get back under control. Just to put the rate of 10.3% into perspective, this chart shows the current inflation levels in the G20, notionally the 20 largest economies in the world. And as you can see, Russia is number 3 on this chart. The only 2 countries with higher rates of inflation are Argentina, where it's over 55%, and Turkey, where it's over 38%. And if you follow the channel, you know we've talked a lot about those 2 economies. They're both in severe difficulty at the moment. And in fact, none of the rest of the economies in the G20 have inflation above 10%. The next highest is Brazil, with around 5.5%. And then the majority of the G20 have inflation of less than 4%. So it tells you that something is majorly wrong in Russia at the moment when its inflation is at 10.3%. And if we have a look at how that compares to the rest of the world, Russia actually ranks at the moment as the 27th highest country in terms of inflation. So that puts into perspective these problems, because it's meant to be one of the biggest economies, and therefore it shouldn't be having inflation as high as some of the other countries showing on this list. This chart shows the movement in food inflation over the past 12 months, and food inflation is something we always like to talk about because it tells us what's happening with the poorest people in the society, because they spend a much higher percentage of their monthly wage on food. And what you can see here is a very similar trend to what we just saw for overall inflation. We've got an upward movement here in inflation over the past 12 months. And over the past 4 months, we have actually seen that accelerating. And the most recent data for March 25 shows that in food inflation is now sitting at 12.4%. And if we widen the scale of this chart to show it's been happening over the past 3 years, you can see that that's actually the highest level since September 2022. So this is a major problem from Russia's point of view, because food prices are now getting out of control. This chart shows the movement in producer prices, also known as factory gate prices, so the price that companies are selling their products for as they're leaving factories and other places in Russia over the past 12 months. And what you can see here is a general downward trend in producer prices. And the most recent data for March 25 shows that year-on-year producer prices increased by 5.9%, which is materially lower than the 10.3% for inflation. So you may see this as a good sign. However, if you think about what's happening here, the companies in Russia are now selling their products for 5.9% higher than they were this time last year. However, overall inflation is up by 10.3%. So what that tells us is that the companies in Russia are not driving inflation. In fact, their price increases are around half of what's happening with inflation. So what that means is that it's external forces that are driving up inflation. So that's the cost of all of the imports. And that makes sense because Russia is facing severe sanctions, so the price of things has gone up generally. And it's interesting because we looked at the ruble earlier, and the ruble's actually strengthened in value significantly over the past few months. So that would mean, in theory, that the purchasing power of the ruble for all of the Russian consumers would be going up, and therefore inflation should be going down. However, we're not seeing that. We're seeing inflation going up, and we're seeing producer prices not going up at the same rate. And this tells us that there are severe problems and a disconnect of what's going on in the Russian economy to what should be happening. prices are continuing to rise, even though the ruble is strengthening in value. It's not having an impact because nobody's doing any trade in rubles. So it's almost irrelevant what's happening with the ruble. And the fact that producer prices are only going up by 5.9% tells us that Russian companies aren't making as much profit. They're not able to benefit from that 10.3% increase in prices. They're not getting that. It's being driven by external forces. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening in the Russian economy right now is really quite interesting, because what we are seeing is that Russia is posting consistent falls in its oil and gas revenues. We've got a 17% fall in March, and year to date they are down significantly. And one of the reasons for that is because oil prices are now declining, and Russia can't do anything about that. This is set by the global markets, and Russian oil prices come in less than Brent crude oil, but generally it moves in the same direction. So because of Donald Trump's tariffs and the general fear about a global slowdown, we're now seeing oil prices softening, and it's expected that they'll continue to sit like that for the rest of 2025 unless something major happens with regards to Donald Trump suddenly withdrawing all of his tariffs. So this is having a really bad impact on the Russian economy, because their main source of revenue, it was around 30% of their revenue last year, is falling in price and therefore falling in value, so they're getting less money from it. But at the same time that that's happening, the ruble is also strengthening. It strengthened significantly from around 115 against the dollar at the start of 25 to around 80 now. That is a major movement for a currency like this. But the problem that Russian companies have is that they're not being paid in dollars. And they're not charging in dollars. They're just having to convert whatever revenue they get in foreign currency back into rubles. And as the ruble strengthens, it means that they're actually getting less, because on a like-for-like basis, the ruble's going up. So Russian companies are actually suffering because of the strength of the ruble. Now, you would think that Russian consumers should be on the other side of that. They should be benefiting, because if the price of the ruble goes up, you can buy more things with it in the international markets. It's worth more. However, that isn't happening either, because we're continuing to see inflation going up. So prices are continuing to rise in Russia despite the fact that the ruble is going up in value. And that really doesn't make a lot of sense. And the reason why all of this is happening is because there's a disconnect between what's going on with the ruble and what's happening in the economy. That's been happening for a long time, because not many countries are actually trading in rubles. Most of Russia's trading partners are dealing in other currencies. So the ruble is becoming a dead currency from an international perspective. And all of this means that Russia is now looking at a major deficit in 2025. It's sitting at 2.2 trillion rubles after the first quarter. However, if oil prices remain low and the ruble value remains high, that's actually a double whammy negative from Russia's perspective. And we could see a record-breaking deficit posted in 2025. And what that means, of course, is that Russia is going to have to fund that deficit. Up until now, it's been funding all of its deficits from the National Wealth Fund. However, as I've reported before, the National Wealth Fund is now down to around $35 billion. So there isn't a huge amount left in the kitty if Russia does post a massive deficit. And all of this is going to prove highly problematic for the Russian authorities for the rest of 2025. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting me. If you bought me a coffee or sent me a YouTube super thanks, really appreciate that generosity. Thank you. And if you're a long-term supporter, either through Patreon, where you can watch the videos advert-free, or YouTube membership, where you can watch them promotion-free, or buy me a coffee membership, thank you so much for that support. Really helps to keep me motivating. And here's something to put a smile on your face. Click the link in the description below for 15% off Investing Pro and start using Investing Pro today.